Hello, guys, and welcome to the show. This is a very special edition. It's only going to be recorded in audio, but let's get started, and let's turn on the charts right here. Now, the first thing I want to look at is everything with the Brexit is changing by hour to hour, day to day. It's a situation where it's happening on the fly. I mean, the whole thing is so mixed up, so convoluted, but we're going to try to make sense of it this morning, and the reason why is simply because all of the markets have been pumped up. Oh my goodness, the stock market's pumped up right now. The stock market's going to be opening very soon. We're going to go over all of the markets, but first we're going to take a look at this Brexit. Third time lucky for Theresa May's Brexit vote. So they're going to try again this week. UK Prime Minister Theresa May will be hoping the third time is a charm when she tries to get the House of Commons to back her Brexit deal this week. After two previous defeats, she'll need more than just luck to get lawmakers to change their mind. The question being posed in Downing Street this week, what will it take for more than 70 lawmakers to back her and get her deal over the line? And does that plea bargain include the Prime Minister's promising to step aside within weeks in return for more votes of her own Conservative side? This suggestion is gaining ground in Westminster. On BBC Radio yesterday, former Cabinet Minister Esther McVey called on May to announce a dignified departure from number 10 and to make way for a new Prime Minister whom she urged would be more enthusiastic about the United Kingdom, making a clean break from the European Union. This view is shared by an increasing number of Conservative MPs. McVey resigned from May's cabinet last autumn in the wake of the Prime Minister's agreeing her deal with Brussels. McVey says that a withdrawal agreement is still a bad deal, but that she has decided to vote for it. So she's saying it's a bad deal, but she's deciding to vote for it. This is getting totally ridiculous, folks. It says, when it returns to the Commons for a third time, because she fears that otherwise Brexit may not happen at all. See, they're buying into this whole thing that Brexit won't happen unless they vote for this bad deal. It says, McVey isn't the only Tory lawmaker who has switched sides. There's a tremendous amount of peer pressure going on right now, evidently. And this peer pressure is trying to push them to vote for this deal no matter what. It gets even worse, folks. Let me read on. McVey isn't the only Tory lawmaker who has switched sides and is planning to back the deal in the Commons. Several MPs have announced that they have changed their mind in recent days. The number is not yet 75, the figure May needs for victory, but it's a significant start. Ministers spent the weekend in talks with the Northern Irish Democratic Union Party, whose 10 MPs have so far opposed the deal, to try to persuade them to change their minds. May's government could even offer financial incentives in return for votes. What? Am I hearing this right, guys? It says they're going to try to persuade them to change their minds. May's government could even offer financial incentives in return for votes? Am I hearing that correctly? It is thought that the 10 DUP lawmakers switch sides. Many Tories will follow. This is getting to the point of ridiculous. But anyway, let's move on. They're going to try to get this vote through, even by buying votes, evidently. That's what it says here. Financial incentives in return for votes. Okay, but let's move on. EU. Donald Tusk has said that they're going to give them an extension to Article 50. Now, this just breaking news. An extension to Article 50 has been granted. They're granting an extension to April 12th, which is 2 weeks. So they're going to push it off from the 29th of March. So my program last night, where I said the 29th of March, is now off. Now it's the 12th of April, 2 weeks later, that the hard Brexit's going to come into effect if they don't get a deal through Parliament. Okay, so they're going to be working on this deal. Now we're going to move on again, and it says Brexit suddenly gets real as Emergency Cobra Committee takes charge of the no-deal preparations. So they're enacting the emergency preparations for a no-deal, the preparations and full crisis plan. It's known as Operation Yellowhammer. It's coming into effect. It's scheduled to go into effect on Monday, Operation Yellowhammer. They're very worried that the Brexit is going to happen, evidently, in two weeks, or that would be exactly 3 weeks from now. Once Donald Tusk's new extension runs out, if they don't get the votes in the Parliament. So it's all coming down to this vote in the Parliament now. That's what it's all down to. And evidently they're going to make this vote in just a matter of a few more days. They're going to vote again on this the third time. We're entering into a new type of politics in the world, folks. A politics where they vote on something, and if they don't get the desired results, they vote and vote and vote again until they do get the desired results. This is some strange new form of politics that I'm not used to, where they even buy the votes if they have to in order to get the desired result. And also they keep going and they keep voting on it again and again and again until they get the desired results. Strange new form of politics, folks, that I've never seen before. A strange new form of democracy, if you can call it that. It's just beyond me. I don't understand it. I've never seen anything like it before, but this is a first, and evidently they're setting precedents, so they'll be able to get anything in that they want to get in. They'll just keep voting on it again and again and again until they do get it in. This is a new form of politics, I guess. Anyway, I'm being a little bit sarcastic here, but what can you do? I mean, anyway, let's move on to the markets today. Of course, you guys do understand that if they do not get the votes and this thing goes through Parliament again, they're going to head for a hard Brexit, and this could be the trigger for the markets, for all of the markets, and that's why I'm watching it so closely. But let's just say they do get the votes and this whole thing settles back down again. It doesn't mean we're not going to have a market crash, because the same problems that exist in the market, the problems that were created in 2008, have not went away. They've just papered them over. The world is a mess, and we're headed into a recession, whether Brexit pushes us into a recession or not. It doesn't really matter. Now, the markets are getting very edgy, and I'm going to explain it to you in a minute. But here's the thing. What we're looking at here on silver is a drop in price of 6 cents. It's down to $15.38 this morning. We're going to check the gold price too, and we're seeing that the gold price is actually up $2.50 while silver is down. This increases the amount of the gold to silver ratio when we get little moves like this that actually happen. Gold to silver ratio right now is it's not in its proper place. It's only been on a place like this several times in history. It never lasts for very long when you get a gold to silver ratio that's more than 80 to 1. Generally, the typical is more like 40 or 50 to 1, and it can go as low. It's like 15 to 1, 10 to 1, but I believe that what we have coming in the future, and not too far in the distant future, is a gold to ratio of 1 to 4. And I'm talking about probably within the next 10 to 20 years out from now. Probably within 10 years, you're going to see a gold, 10, maybe 15 years, maybe as long as 20 years, but you're going to see a gold to silver ratio 1 to 4. And the reason why is because they don't use gold for a whole lot of things. They dig it out of the ground, They form it into bars, and they use it as a backing for the monetary system. And we're going to find that out more and more as Basel III comes into effect very soon. We're going to find out that gold is a backing for the monetary system. They form it into bars, and they do make a bit of gold jewelry out of it and stuff. But overall, in industry, they don't use it that much in industry. They use silver in industry. Silver's an industrial metal. They're consuming it. They're taking it out of the Earth's crust as fast as they can with new modern mining techniques. And this is the only reason that mining production is staying high, is because of new modern mining techniques. Giant machines that scoop it out of the ground so fast, rock crushers, and different kinds of machines that are able to get the silver out of that ground quickly and effectively. And so what they're doing is they're stripping the earth of silver. And they're wasting it all. Silver's a precious metal. Yet the price has been falling while the price on everything else you buy has been going up. Ultimately, this cannot continue. Or silver is going to be so cheap in the end, it'll be the only thing you'll buy. Instead of buying gravel, you find the price of gravel keeps going up and the price of silver keeps coming down. In the end, they're going to pass each other and you'll be able to pave your driveway with silver. I mean, that doesn't sound right, does it? Something's wrong here. Because silver's a precious metal. So what we're going to see is we're going to see a flip or reversal of this. And when this flip and reversal happens and things go back to normal, it's going to happen very quickly. And because they're stripping all the silver out of the ground as fast as they can get it, silver ore grades are going to drop off significantly in the coming years. And this is why the silver to gold ratio is going to change so drastically, as there's a lot more gold in above ground inventories than there is silver. Okay, so it's the old saying, something's wrong here. Anyway, we're going to move on with the markets, and we're going to take a look at cryptocurrency this morning. Cryptocurrency is actually staying pretty strong. I had a little bit of a dipsy doodle down. If I go to the 1 minute, I think we can see it. No, I have to go to the 5 minute. There it is, right there. It was up to $4,055, and we had a sudden drop. We had a few bears dumping their coins in, you know, and we've seen this action before. It's starting to get weaker and weaker. The bears action's starting to get weaker and weaker, and if you take a look, if you go back let's go back to the 2-hour chart, you can see let's even go back a little bit farther. Let's try the 4-hour chart. Here you can see we put in these bottoms. Ever since then, it's been slowly, with a few dips, you know, it's been slowly working its way back up again, out of the hole. Will we test the bottoms again? I'm not so sure. I'm giving it a 50-50. We could test the bottoms again, but because we're not really out of this bear market until Bitcoin gets up a little bit higher. Let's take a look at cryptocurrency market capitalizations this morning, and what we're looking at is 140.2 billion with a Bitcoin dominance of 50.8%, and the coins are starting to peak up a little bit. Litecoin's back up above $60. We're looking at Ethereum at 138.16, XRP at 31 cents, been at 31 cents for a long time. EOS at $3.68, Bitcoin Cash at $157.95, Binance Coin at $15.23, and Stellar at 10 cents. Okay, so there's our cryptocurrencies for today. Now let's take a look at the Dow Jones this morning. She's down 109 points, and this is probably the first initial reactions is probably causing this to what's happening in Brexit. They're just starting to realize now, hey, you know what? There could actually be a hard Brexit. It's starting to dawn on them. Just now. This could actually happen. It's starting to actually dawn on investors. That it could actually be a hard Brexit. You know, I mean, it's just starting to dawn on them. Okay, so now let's take a look at crude oil. Off 82 cents on the day, 1.37%. Well, you know, OPEC's got its back. Crude oil's back. So, if we get a recession, we're probably going to see crude oil prices drop. But I'm going to tell you what. I shouldn't say if we get a recession. When we get a recession, we're going to see crude oil prices drop. But oil prices have been slowly increasing ever since we put a bottom in December 24th of $43.93. Now we're going to take a look at bonds. We're going to take a look at this pretty closely. And the reason why is this is where we're seeing the money flying into right now. The capital's flying into bonds. They're getting scared. The nervous investors are buying into bonds. Really, this bond buying is really still heavy, and we're seeing yields falling on the U.S. bonds. You know, the U.S. bonds are the most attractive bonds in the marketplace right now. They get the best yields, and it seems to be the most secure place for investors. This is their safe haven asset right now, if you can believe that. But, you know, we're seeing an inversion all the way down to the U.S. 10-year now at this point. Hasn't made it to the 30-year yet. But if we take a look at the U.S. 3-month, 2.47%. 2.47% on the U.S. 10-year. So this yield curve inversion has made itself all the way down to the 10-year. So we're looking at 2.47% on the 3-month. The 2-year is 2.36%. Significantly lower yield than the 3-month. and an even lower yield yet on the 5-year, 2.28. We got to go all the way out to the 10-year before we get the same yield, 2.47. And the U.S. 30-year is 2.9. So we're looking at almost an inversion all the way across the board. Only the 30-year is holding out yet. But seriously, this is a sure sign of a recession coming, and very soon too. Now let's take a look at, let's see, what haven't we covered? We haven't covered the U.S. dollar index yet, which is at 96.63. The fear is helping to hold the dollar strong. And initially, I did shows a long time ago where I said that this would be the reaction. The initial reactions of the market crash, until the market crash gets really bad, is that they're going to go into the dollar. So we could see a little bit of a strengthening. I said 3 assets are going to go into initially: gold, silver, and the dollar. Right? But then when things switch, when the Fed comes to the rescue, then they're going to dump the dollar at that point. So initially they're going to run into the dollar, and then they're going to dump it later. That's when the dollar's going to start to really get in trouble, you know, and we're going to see the dollar index slowly fall, you know, at that point. So the markets could be heading for some real turmoil. It's all got to do with Brexit right now. Brexit's going to become big news, and the world is going to be actually watching this vote that they're going to put to Brexit. Listen, thank you guys for listening. Like and subscribe, and stay tuned for the next show. Bye-bye, guys.